Hey guys, it's your boy Symphonies Ryan again. Today is a very tricky day. So first of all, you see as my chart is rough. So let me cancel everything first. This is a trade recap for Tuesday, which is today. So the first thing we do is go to the 4 hour time frame as we always do, and then we look at the 6 a.m. candle, what the 6 a.m. candle did. So this one right here, the 6 a.m. candle is closing bearish, which this candlestick is it's giving me a dodgy candlestick. With this, I'm like, okay, yeah, the market want to sell. Let me now tell you the biggest mistake I made is that I know the market is delivering from this fair value gap on the 4 hour time frame. Okay, market's coming from this 4 hour time frame fair value gap, which is even a BPR. Understand? This is a BPR for me. Understand? So let me save it as BPR. That's a BPR. So if you go to the Nasdaq, let us explain Nasdaq. Let us go at 6 a.m. candle on Nasdaq. 6 a.m. candle is closing above the previous above 2 a.m. candle on Nasdaq. Let me cancel everything on Nasdaq also. It's closing above 2 a.m. candle on Nasdaq, which is signifying from that Nasdaq might buy. In this kind of situation, when the two of them are giving us different things, what I used to do is I know that that is going to be tricky. I know that already. Understand? So I'm going to explain that. So the next thing is that I understand that okay, we have the same BPR on Nasdaq also, the same BPR as we do on S&P 500. Then in that state, I was like, okay, this market is going to buy because I realized that BPR is more powerful than what's it called, this normal fair value gap. So BPR means balance price range. For you guys that don't know it means balance price range. So we have another fair value gap right here, which market just tapped into that fair value gap, and then this fair value gap is a fair value gap whereby I know that okay, it might push the market down. So in this case, I have a BPR that I want to push the market up. I have a fair value gap that I want to push the market down. So the market is between two things. I can't know the direction. So in this case, the next thing I did is that I went straight to the 5 minutes time frame. I didn't even disturb myself. I went straight to the 5 minutes time frame. And then the next thing I was looking for is that okay, what am I going to look for? Then I saw this. This is where the funny thing came up from. Like I saw this. I saw this there's a SMT right here before I took this trade right here like this. There's a SMT right here like this. Understand? There's a SMT like this. It hasn't taken this low then. This is like this. If you go to S&P 500, there's a SMT around this place. Yeah, that same low, which is this low. You see, this is the low right here. There's a SMT right there. Immediately I saw this SMT, and why do I take the trade? Why I say this SMT? Although this one is not inside my equilibrium anymore, it has go below the discount zone and then giving me a SMT. But Nasdaq is still inside the discount zone, mind you. Understand? Nasdaq is still inside the discount zone, even though when the SMT happened, you see, Nasdaq is still inside the discount zone. But what I did not know is that what I should have put my mind in is that my market has came here and then it has reacted with the discount zone on Nasdaq. But now it's trying to break structure. I should have understood that market has broke structure right here because it has taken this eye out and is already breaking structure. That's what I did not see. That's the biggest mistake I made. Then instead of me knowing that okay, market has break structure, I did not see that. I'm not gonna lie. I'm not going to say okay because I want you guys to see winning trade. No, it's a losing trade. I want to explain it. So on S&P 500, as I saw the SMT, because I've done this thing has happened to me before, I understand that okay, the market is likely going to buy. So I went straight to the 1 minute time frame, and then I was waiting for my last step, which you guys know just inversion fair value gap or big of structure when it's SMT. So I was waiting for inversion fair value gap. So I marked it out like this, inversion, and then look at it. Market close on the tip of the candle. Then I just execute because I was like, I don't want to miss this entry. I'll say FOMO is what affects me today. I was like, I don't want to miss. I don't want to miss. I don't want to do this. I don't want to do that. I was just keeping like, okay, I want to just execute. So I put my stop loss below, and then I was targeting 1 to 2. Understand? I was targeting 1 to 2. Like, okay, let me just see what market is doing. And I hit stop loss. So immediately I hit stop loss, I realized that okay, I have made mistake. Understand? And I know that okay, I'm not risking more than I can afford to lose. So I can afford to lose what I lose. So now let us cancel this one. So how do I take the second trade? Which the second trade it's break even and it's very very annoying. So after then I went back to the 5 minutes time frame. On the 5 minutes time frame, then I said to myself, okay now the market want to sell. Why do I say that? I've seen a break of structure right here. I've seen a break of structure right here on the 5 minutes time frame. Then I had to draw my equilibrium like this. I've drawn my equilibrium like this. I know that okay, I'm waiting for the market to come into this my discount zone, right, which is right here. Understand? That's what I was waiting for. Okay. So I drew my equilibrium like this. Yeah. I drew my equilibrium like this. Come and see what I'm saying. This is based on experience. If you are just using this strategy, you might not know how to do what I just did today. So now I went to Nasdaq also. I drew the same equilibrium. Let's use this one, which has make us lose. Understand? I drew the same equilibrium from here to the downside right here. Understand? So now, how do I get my trade? Immediately I draw my equilibrium, I went straight to the 1 minute time frame. On the 1 minute time frame, that's where I was looking to like take a trade. So on the 1 minute time frame, the next thing I did on 1 minute time frame was that okay, I was waiting for SMT. So if you look at this eye, which is 10:05 eye, I just drew my line on it. Okay, I know that okay, let's see the one that's gonna take the 10:05 eye faster. So that's what I did. So I mark out the 10:05 eye, which is this also. This is the same 10:05 eye. And what happened? Market took S&P 500 took 10:05 eye right here and used the same thing to tap into my what? Into my 50% discount zone. When I saw this, I'm like, okay, now the sell want to happen. Even though he's not feeling it yet, he's not feeling the discount zone, he's just tapping into it. I know the sell want to happen. All I was waiting for is my inversion in this case. So I said to myself, I'm not going to use big construction, I'm going to use inversion, which is one of the strongest that I love. Then in this place, I have my inversion. This candle closed below, but remember my previous mistake. The candle did not close below very well, which was the one I made here. So I learned from my mistake and I said, no, I'm going to wait for a candle to close below all this ranging candle. And then when I see a candle that closed below this place, I execute myself. Then I sold from here and put my stop loss above right here. And I said, okay, this is my second trade. And if this one should hit SL, I'm going to stop trading. This trade went for 1 to 2, but do you know the funniest part? I'm not targeting 1 to 2. I'm not gonna lie to you. I was targeting this low because I'm like, it's obvious. Like the market is gonna come there, it's obvious. So immediately market eats this liquidity right here. Market eats this liquidity. The next thing I did is I took some partial profit, right? I took my partial profit and I leave two position on, and then the two position I break even and market came back and hit my break even. That's how I trade today, and that's how the market just end up trying to like fuck us up. So I was trying to take my third trade because 3 trade is the maximum I take a day. If I lose two trades back to back, I'm not gonna take trade anymore. But because this one is a break even, I was willing to take the second trade. So now in this place, I was waiting for an SMT right here. Market did not give me SMT, but it gave me balance price range. You understand? This is it. I was waiting for market to give me SMT. See, there's no anything like SMT in this place, so that's why I couldn't take this short. If I am to take this short without SMT, I'm going to take it on S&P 500, and it would have been a very good short. What do I say? What do I mean by that? Look at this. Look at this very tiny inversion, and then this break of structure. But it's not following my plan. I did not see SMT or fair value gap to like, you know, hold up with it. Understand? So I said, no, I'm not gonna take it. If that okay, I have a fair value gap in this place, around this place right here in 5 minutes time frame, and maybe it's inside a fair value gap that is in doing all this thing, I'm going to take it. But it's not inside a fair value gap. Understand? And if I even take this trade, I might even it break even though, because this is 1 to 1.5 and I break even in 1 to 1.5. It's going to hit my break even. That's it. So I think I didn't even take it. So that's what I did today. So thank you guys for watching my video. Please subscribe to this YouTube channel, please and please. This is the only way you could support me. I'm gonna post my trade recap to the ending of this year, and I want to see how much subscribers I could pull up with this. So thank you guys. That's how I traded today. One loss, one break even, and I was able to recover half of my loss from the partial profit I took from this. Thank you.